the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. While Singapore shares nudged higher today as traders in the region struggled for direction. So if we look at the Straits Times Index, it was up 0.24% at 3,884 points at about 2:32 p.m. Singapore time. And that is with a value turnover of some 476 million Sing dollars in the broader market. Now, as we shared with you earlier, the STI closed in the green as well, up 0.53% at the close. We're looking at 3,896 points. In terms of value turnover, that's 958 million Sing dollars. Gainers outnumbered losers, 249 versus 180. Top advances for today, DBS, Takrao and UOB, and top decliners we've got here GMHUSD, Avaga Limited and Holpa. Now, in terms of companies to watch, we have Sembcorp Industries because the group said yesterday that its subsidiary Sembcorp Utilities entered an agreement with several of its Southeast Asian counterparts to explore exporting renewable energy from Vietnam into Malaysia and Singapore. Elsewhere, from shares of BYD extending losses in Hong Kong as sweeping price cuts stoked concerns of another wave of discounting in China's EV market. To what to watch ahead of Nvidia's earnings out tomorrow, we've got more corporate and international headlines in focus. And joining me right here in the studio is Willie Keng, founder of DividendTitan.com. Willie, welcome back.
Hey, Tian Tian, thanks for having me on the show.
Great to have you. And Willie, let's start with the Singapore stock market as usual. How did the STI fare today? Any surprises when we look at the biggest movers and the sectors that they lie in?
Yeah, I mean, if you look at the STI index, they have been pretty happy so far despite some of the uncertainties in the markets, in the Asian markets. And I think largely because if you see how the Singapore stock market is, it's largely, by and large, a more resilient, defensive a place to be. And if you look at what is supporting the Singapore market, you have the three local banks, DBS, UOB, OCBC. They have done pretty well. You also have, in particular, CapitaLand Integrated Commercial Trust, which is up about 1.5%, largely due to the fact that it's a flight to quality kind of Singapore REIT. So when times seems to be shaky, capital tends to flow in some of the bigger REITs. I think one thing in focus, you also have SETS, which was up about 1.5% for the day, largely from its better results. And also, you can see how some of the cargo volumes, its results have sort of panned out well after the COVID-19 pandemic. So these are some of the movers which I'm actually watching for today.
Aside from SETS, I do want to set our sights on Sembcorp because the group said yesterday that Sembcorp Utilities entered an agreement with several of its Southeast Asian counterparts to explore this exporting renewable energy from Vietnam into Malaysia and Singapore. How significant is this to the firm if we look at its share price movements today? Yeah,
I mean, if you look at how the markets have reacted to this news, it's generally quite positive. And I think markets are happy about Sembcorp after they sort of reorganized the business, hiving off their offshore marine business. And right now, they're more focused on their renewable energy and urban solutions. I mean, this is something which I've also written on my blog that they're looking at the next growth likely to come from renewable energy. And so this contract in Vietnam would be a positive effect. If you look at how Sembcorp is, over the last 3 years, they have been investing about $1 billion in capex in this particular segment. So I think this is worth watching for. One thing which I will be keeping an eye, of course, is on its leverage. I mean, you need a heavy amount of capital investments in order to move this kind of projects.
Certainly things looking up for Sembcorp Industries. I mean, if we look at investors' reactions today, shares up 0.902% at the close. Well, across the region, Willie, let's have a look at BYD. Shares extended losses in Hong Kong trading today, taking their 2-day slide to more than 10%. As last week's sweeping price cuts stoked concerns of another wave of discounting in China's cutthroat EV market. In morning trading, the stock fell as much as 4%, following yesterday's 8.6% drop. I understand later in the day it somewhat clawed back those losses. But tell us more about how concerned you are regarding this. And perhaps the second part to the question then is, what will the latest round of discounts mean for other EV players, particularly those in Europe and those in the US, the likes of your Tesla?
Yeah, I mean, Tian Tian, as an investor, I'm always in particular about intense competition. I want to know whether these kind of businesses, they are able to actually compete in a very fragmented market. And if you look at car makers, they typically tend to compete in a very competitive environment. If you look at how traditionally the three big players, the automakers, right, Ford, Chrysler, and you have General Motors, years ago, you have tens of thousands of these car makers, but today you have only of these three big US car makers. And if you look at the electric vehicle, where they're going to, they are following that kind of general trend. If you see Tesla earlier on, since last year, they have been looking at price cuts. BYD is something which they follow through because the nature of the business is a largely commoditized business. So in the short term, you are expecting some of these Chinese players to start cutting prices. You are looking at Geely as well, with some of their models, also looking at potential price cut, which also allows, newer entrants, newer players into the market itself. So if you look at automakers, this is something which we have to actually to be more concerned of. Having said that, follow up on the second question, Tian Tian, European car makers, if you look at how the nature of price cutting is, it is going to invite competition from the European car makers, which is a plus point. On one hand, you have the tariff war, which allows them to diversify their segments away from the US into China. So I think this bodes well. Of course, I think one thing to look out for is always the profit margins of this business. If you look at how car makers traditionally, Ford, for instance, their net margins are typically around 3 to 5%. BYD, they have been growing, but you look at the net margins about 5% as well. So as long as I think they're able to squeeze out the profit margins, I think it's still sustainable. However, I think I would still be focused on whether they are able to actually stand out in a very competitive car maker environment.
So basically, competition is here to stay. Ultimately, who benefits? Whether the investors benefit, that depends on the profit margins, but certainly consumers are the ones benefiting.
Yes, of course. At the end of the day, I think consumers, they are very price sensitive, especially those who are looking for bang for your buck kind of cars.
Staying in Asia, Willie, the yen rose against the dollar after Bank of Japan boss Kazuo Ueda said he intended to keep raising borrowing costs. That is if the economy performs as expected. So he told a conference in Tokyo that the central bank will adjust the degree of monetary easing as needed. What do you make of the latest comments?
I think this is a pretty interesting point for Japan because if you look at how the central bank is, they have already raised short-term interest rates to about 0.5% at the start of this year. So this was the highest level in 17 years. On one hand, this spells out a strong economic tailwind for the country. But at the same time, I think Ueda is also very cognizant of the fact that there needs to be vigilance in terms of inflation. So while economic drivers bodes well for slightly high interest rates, but he also wants to look at some of the concerning rising food prices, and that could actually has pushed core inflation to about 3.5% earlier in April. So I think because of this, he would actually adjust monetary policies according to inflationary pressures. At the end of the day, I think they are in a tricky position in trying to balance the need for growth and at the same time trying to prevent excessive inflation.
Okay. Now, if you're just tuning in, we're in conversation with Willie Keng, founder of DividendTitan.com. Well, Willie, we talked about inflation, we talked about the yen rising against the dollar. All of that is coming on the back of an uncertain global trade environment. Speaking of which, trade officials from the EU and China, they're planning to meet again early next month. Another sign that both sides are stepping up engagements as they try to push back against tariff pressure from US President Donald Trump. Trump, as we know, over the weekend said, he would roll back on the tariff threats on EU. He would extend the deadline to 9th of July. So any thoughts on that?
So if you look at how the tariffs have actually looked at the tariff reprieve between US and China, I think this calls a lot for the diversification away from the US. And you see how China and European partners are. I think there could be a multipolar trade framework going forward. This means reducing reliance on some of the US-centric trade policies and just focusing on trades between China and Europe. So, for instance, China's Belt and Road could come into play. And you also have the traditional BRICS BRICS expansion coming from South America, from Africa as well. I think this has more partnerships going on with China. At the same time, I think what's interesting here is as we are seeing the weakening of the dollar, there could be more support or proliferation of digital currencies being used as some form of alternative to the US dollar as a safe haven. So this means that countries might be diversifying away from the dollar in some of these trade deals, trying to make trades in alternative currencies, and digital currency is one of them. And at the same time, I think if you see how the trades are done, I think a lot of it is going to be what I call ex-US assets going forward.
Okay. Now, also in focus today, Willie, is how HSBC Holdings has caught more than 24 analysts in recent days as the lender deepens a restructuring of its investment banking businesses. How concerned are you about this?
I think this is actually a good point for HSBC. I mean, over the last couple of years, HSBC has been trying hard to restructure the business. It has been hiving off some of their non-profitable assets. They are trying to streamline what I call distinct themselves in focusing Eastern and Western kind of businesses. So if you see how HSBC share price have actually performed, it has actually recovered quite considerably over the last couple of years, and it has been a very happy thing for many dividend investors, growing its dividends. So it cutting off, laying off the job cuts and downsizing the employees really comes in line with the restructuring itself. I think if you look at how the bank is, it has been struggling with some of the heavy non-profitable assets, but now it has sort of come more asset-light. And I think if you look at the business itself, the management has said that they are looking to charge about $1.8 billion over the next 2 years. And more of this savings will be redeployed into resources, into more profitable units for the bank.
I see. Okay. And further away, Willie, Nvidia is set to release earnings tomorrow US time. I'll keep the question broad this time around. What are you expecting when it comes down to Nvidia? And more broadly speaking, what to watch in the US?
So I'm looking at more of the AI trend, especially right now with the tariff reprieve. I think a lot of the hyperscalers, including Amazon, Microsoft, Alphabet, I think they will resume on the path of trying to expand their data centers. So I think this is one key area to watch, especially for Nvidia's Blackwell platform. So it has recently unveiled its Blackwell platform, which it aims to focus on advanced AI computing capabilities, especially for this hyperscaler. So I think this is one area to actually watch out for. Another one, of course, on the flip side of the coin is the China export restrictions. And, with how the US government restricting Nvidia's H20 AI chips to China, that could actually impact their revenues. Jensen Huang has already mentioned, CEO of Nvidia, Jensen Huang has mentioned that the market share for Nvidia has actually dropped drastically in China. So I think this is something which investors are looking out for. So all in all, these are the two big areas which I am looking out for and on Nvidia in its earnings coming up.
I see. Thanks so much for the insights, Willie. That was Willie Keng, founder of DividendTitan.com. Thank you so much for joining us on Money FM 89.3.
Thank you, Tian Tian.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.